Recording in progress.
Good morning, Alan. Nkululeko. Do we have enough members that we can start the meeting?
Good morning, Chair. Yes, from Standing Committee on Finance, there is currently 8 members on the platform. Thanks, Chair.
Morning, Chair, and yes, that's the same thing with the Select Committee, Chair. Have enough members. Thanks.
Okay. Let me show my face so that you can see that the meeting is not chaired by a robot. The meeting is officially open and all are welcome. Do we have apologies?
Standing Committee on Finance is Honourable Lekhanyanya, who is with the Edit Committee. Thanks, Chair.
From the Select on Finance, Chair, we have apology from Mr. Khadeb. Thanks, Chair.
Okay, I see the end of Honourable Mazibuko.
Thank you very much, Chair. Good morning to you and good morning to the members on the platform. Chair, if by 1 o'clock the meeting is not done, I would ask to be excused. We have a regional conference of CDBing and we have a meeting at 1.
Okay, Honourable Mazibuko, taken. So let's proceed to item 2.
Chair.
Who's calling?
It's me.
Me who?
Chair, can you hear me?
Come on.
Yes.
Oh, no, change a little voice. Yes, Honourable.
Okay. Thank you, Chair. Just my also apology. If the meeting goes beyond 12, I've got a flight to catch before 12. So please, I request to be excused. Thank you, Chair.
Okay, we'll try to gallop, but not leave behind other important information to make sure that honourable members are still here by the time we finish. As I said, that we are proceeding with our public participation. Today, we are at the stage where National Treasury and SARS will be responding to the submissions that we have received from stakeholders. From there will be comments from each stakeholders, then comments and clarity-seeking questions from honourable members. Remember, us as members, next week we'll meet again to deliberate and take decisions on issues that are raised regarding the MTBBS. So let me call upon National Treasury to make a presentation. 45 minutes, National Treasury. Over to you.
Thank you very much, Honourable Chair. I hope that I'm audible and that my screen is visible. My name is Edgar Sishi. I am the Deputy Director General here at the Treasury, responsible for the Budget Office, joined with several colleagues who will introduce themselves as we go through both the presentation as well as the supplementary responses to any additional questions that may be raised. Chair, firstly, good morning to all the honourable members as well as the honourable chairs of other committees who are joining, and morning as well to all the stakeholders that have made submissions, which we want to acknowledge and we want to welcome, including due to the fact that, as we've said before, we ourselves as Treasury arrange our own public consultation processes where we engage with various stakeholders, including some which are represented here this week. Chair, just by way of introductory remarks, before we go to certain specifics, I'm not going to go through each of these points for the sake of time, but I thought it important to point out a couple of things. The first is that we have submitted this presentation, and it is a very lengthy presentation because of the many issues, including granular and technical points that were made that we seek to respond to. And so there are dozens of slides, more than 60. I'm not going to go through all of them. We've placed a significant portion of slides in an annexure for the reading of honourable members at their leisure because of the time constraints. Chair, I don't know if I should stop. I see there's a hand up.
Okay. Honourable Mauta.
Yeah, no, thank you very much, Chair. Chair, I don't know, sorry, maybe I missed it, but we didn't get the apologies from National Treasury. And we don't know where is the Minister, Deputy Minister, the DG, such that now the presentation is done by Ntate Edgar. Did I miss something, or maybe I did the apologies being registered from NT? Thank you, Chair.
Thank you. You didn't miss anything. Treasury?
Thank you, Chair. My apologies for that. I failed to mention the DG was on an overseas trip. Unfortunately, he has only just returned. So he did indicate to me last night that he wouldn't be able to make it. So I'm sorry about that. He does apologize for not being able to make it. As I understand it, the invitation was to the National Treasury, at least the letter that we received. So I'm not aware that the minister was specifically required, but certainly the DG would like to tender apologies on behalf of the DG due to his travels. I hope that's sufficient, Chair.
Yeah, no. We'll deal with the other issues of politicians. Please proceed.
Thank you. Thanks very much. So as I indicated, we are open to public participation at various levels. This public participation process that we are in right now today is the process run by the legislature. We, on behalf of the executive, run public participation processes as well, and do so at various levels regarding various issues. During this current year, we ran a macro fiscal workshop in August, where we had various discussions, including on the upcoming medium-term expenditure framework for 2026. We engaged with civil society organizations, business professionals, and interested citizens on various issues regarding the budget. We noted during then, and we note now during this week, as honorable members will be aware, the views expressed in these engagements are very divergent. They represent a cross-section of views across the country. And in some cases, they demand policy measures that are opposing to each other, which of course is perfectly understandable and is indicative of the various constituencies that the different groups represent. From our perspective, we aim to balance the different views while at the same time taking into account the macroeconomic realities and outlook of the country within which we have to operate. And what we aim to show in this presentation is that we have done what we consider to be a strong balancing act between these competing requirements. Firstly, it is quite clear, and I think as different stakeholders and honorable members have noted the fact that we consider that the public finances are on a path to improvement. Certainly the upgrade in our rating for the first time in 25 years is testament to that fact. In addition to that, we have a significant acceleration of infrastructure investments, and that's not just infrastructure in respect of economic functions, but also public service infrastructure. This presentation will show how we are adding funds to health, to education, how we're adding funds to, we've been adding funds to the police and so forth. In addition to that, we consider that this will strengthen the prospects for growth, continue to reduce borrowing costs and improve confidence. And the events of the last week, we consider, Chair and honorable members, have been testament to the improvements in sentiment and improvements in confidence in both the South African economy and the macroeconomic management. We will provide feedback on the growth forecast, and we will also talk to the structural reforms that have been where there's been quite a few briefings in this regard, including publications of the progress by both the presidency and ourselves in recent months. So, Chair, what we're saying is that the fiscal strategy remains on course. It is very much in line with the objectives that we announced more than 2 years ago. And we note that this is happening even in the current low-growth economic environment, which of course has to be addressed, and we will address that as well. Key point is the stabilization of debt, the growth in the primary surplus, as well as the decline in debt service costs that we will show. Much has been discussed with respect to the inflation target and the decision of the minister that has been made. We're quite confident that the events of the last week and including this week have borne out the appropriateness of this decision, including the fact that we're not driving inflation down towards 3%. It's already trending within the new target and has been within that target for about a year now, if not a bit longer. And so locking in those gains, we consider, and we will show in this presentation, will be beneficial to South Africans across the board, but particularly the poorest households in the country. And finally, we are going to be speaking about the various reforms to strengthen efficiency and eliminate waste, which we consider is not only good from a savings perspective, but also good for the improvement of the efficiency of the services that the public receives, because the more money gets wasted, the less is available for service delivery. And we will show, Honourable Chair and Honourable Members, how that plan and those reforms are coming together in this presentation. So let's begin by firstly reflecting on the economic strategy and the economic outlook. And I will ask colleagues in the Economic Policy and International Cooperation Division to take us through briefly on points that were raised both by members as well as stakeholders on the strategy as well as the economic outlook. I think I'm going to ask Yolandi Nell, who is the head of macroeconomic policy, to take us through. Thank you.
Good morning, Honourable Chairs, members and colleagues. I'm Yolandi Smith, the Chief Director of Macroeconomic Policy. I want to start with a quick reminder that government continues to implement the 4 pillars of growth, that being maintaining macroeconomic stability, implementing structural reforms, building state capability, and investing in growth-enhancing public infrastructure. Although we have distinguished these pillars conceptually, the work often interconnects. Structural reforms are vital for reducing input costs, lowering barriers to entry, and boosting competition. The outcome objective is to improve productivity and investment, which in turn will influence employment and help reduce poverty. Many of the scenarios we have modeled and published in the past MTBPS and budget guide the type of economic growth impact we expect, and I do refer members back to these publications. It's also reiterated in this slide. In addition, structural reforms in network industries support reduced increases in administrative costs, while improved efficiency supports economic activity overall. Restoring passenger rail will specifically decrease transport costs for lower income households. Additionally, several reforms focus more directly on easing the cost of doing business. Interventions such as the Mzansi Exchange and digital identity and payment systems aim to improve government service delivery. Next slide, please. Moving on to the reform under the macroeconomic stability pillar. The new 3% inflation target becomes the reference point for price increases in goods, services, contracts, and wages. This is achieved by guiding and anchoring the expectations of price setters at the inflation target. It indicates a lasting slowdown in the rate of price rises in the economy. We believe this is important because we have received many calls over the past few years asking government to intervene to lower the cost of living. Maintaining a low cost of living is a crucial policy objective, especially in a highly unequal country with high poverty levels. To keep living costs as low as possible, the price index should change as slowly as feasible, and consequently, the inflation rate should be as low as possible. Basic calculations show us that at an average inflation of 4.5%, the cost of living doubles in 16 years. Conversely, with an average inflation rate of 3%, it only doubles in 24 years. As a side note, at the same time, with an average inflation rate of 4.5%, the cost of living would have tripled at the same time. Next slide, please, Edgar. The National Treasury released the macroeconomic review in Budget 2024, highlighting the need to review the appropriateness of the inflation target. We followed a similar consultative process that as we did with the introduction of the original inflation targeting framework in 2000. The wider public was informed about the work, but the detailed consultations took place with the President and Cabinet. By announcing the policy change in the budget, parliamentary hearings can scrutinize the decision just as they do with the budget. The rest of this slide outlines the legislative mandate and the roles of the institutions. But to save time, I will move on to the next slide. Please, Edgar. I hope yesterday's MPC announcement of a 25 basis point reduction in the repo rate will support our assertion that lower average inflation, driven by a reduced target, will lead to lower average interest rates. For instance, Inflation was 6.1% during the period 2000 to 2009, decreasing to 5% in the later years of 2010 to 2025. Over the same period, the average repo rate declined from 9.9% to 6.1%. The 1 percentage point tolerance band that we've built into the new target provides the bank with some flexibility to, as we say, look through supply shocks and to manage risks to second-round pressures on the inflation outlook rather than the shock per se. Next slide, please, Edgar. I wish to draw your attention to the graph on the left. The red bars represent the average inflation per income decile from 2009 to 2024. The black diamonds show the year-to-date inflation outcomes per decile. While it is true that higher income deciles experience different inflation rates compared to those of lower income deciles, lower inflation benefits everyone, but especially the poor, who are least able to hedge against higher inflation. As in the future, less of their potential fixed income will be consumed by price increases. The new inflation target means 3% becomes the benchmark for price increases of all goods and services. This will help lower inflation on goods and services, including food, which will benefit low-income households especially. When inflation exceeds nominal income growth, purchasing power declines, and therefore the new inflation target aims to keep inflation structurally low and enhance affordability over time. Next slide, please. Just a short note on this slide. The Reserve Bank increased their near-term growth outlook to 1.3% yesterday. National Treasury recognizes the structural weakness that contribute to the slow growth profile over the MTF. Treasury's forecasts broadly aligns with that of consensus, while the weaker first half growth of 0.7% is one of the reasons, among others, for the downward revision of real GDP compared to the May 2025 budget overview. Despite ongoing global uncertainty, consensus global growth projections still indicate continued resilience, which supports the South African economy. I'll hand over to the next presenter. Thank you.
Good morning, Honourable Chair, Honourable Members. I will take you through some of the tax policy and tax revenue issues. So in the MTBPS each year, we try not to make any tax policy announcements. We usually reserve tax policy announcements for the budget in February each year. The main goal of the MTBPS is to update our revenue estimates as well as the fiscal framework over the next 3 years, which we did in this MTBPS. However, we do get a lot of comments on tax policy each time we do an MTBPS. We'll try to respond to some of these issues. But in general, we've maintained the same broad tax policy direction that we outlined. We haven't made any adjustments to that. We focused on trying to protect the tax base, do reforms to improve the revenue from that should flow through in the following year. We've also done tax incentive reviews, and those will continue. We have discontinued some tax incentives. We put in sunset dates on almost all the tax incentives. And if there is no evidence that those incentives are working, we have let them lapse, which we have done for a number of tax incentives in the past. The 2025 budget did announce that we would increase tax revenues by 20 billion in the 2026 budget if revenue collections were not exceeded, or if SARS were not able to collect the full amount of their debt collection efforts that they needed. We are hoping, and we have been hoping, to improve tax revenue by increasing tax compliance and improving administration. This is a far superior method of increasing revenue in our perspective than increasing tax rates. And as part of that, those efforts, we've been providing additional resources to SARS to both recover tax debts as well as invest in new technology and new mechanisms to collect debt to try and reduce the tax gap that is available. And we hope that those additional resources will start to lead through to higher revenues. We go to the next slide. So in terms of the tax proposals that we did receive, and as I mentioned, we don't talk about tax proposals in the MTBPS, but we do get a lot of comments on what we can potentially do in the 2026 budget for next year. So some of those are, for example, to increase the corporate income tax rate, stronger measures to combat illicit financial flows, introduce a progressive net wealth tax, strengthen income and property taxation, increase personal income taxes on high income earners, increase inheritance and estate taxes, reduce tax breaks for high income earners, close loopholes, remove the medical tax credits, systemically review tax incentives, which I spoke about, an increase in the health promotion levy rate up to 20%, as well as for excise duties on alcohol and tobacco, that they should be aligned with CPI and shouldn't exceed it, and strengthen enforcement. So there are a lot of measures there. What we like to do is then to take these away and consider those for the budget next year. We still need to assess what will happen with revenue. The big revenue month for us is December. So at the end of December, at the beginning of January, when we've got those figures, we will see what has happened with the corporate income tax collections, because a lot of those payments are made within December. And then we can assess whether we need additional revenue or not. And we can consider a lot of these measures as we do each year. A lot of those measures did come up in the budget in May, and we have quite a long set of slides that we presented in May that included our response to a lot of those issues. I can't see the slide anymore, but I'll go and I'll talk about the next one. So in the next slide, we do talk a bit about these measures to increase taxes on high income earners. And the point we want to make is that we do get these comments a lot. Every time we come to Parliament, we get calls to increase taxes on high income earners. It comes across as if our system isn't progressive, but it is. And we've spent 10 years of increasing tax rates on high income earners, reducing loopholes, getting rid of any mechanisms that high income earners can use to reduce tax. And which has led to us now having one of the most progressive tax systems globally. We are in the top 5 globally in terms of how much personal income tax is paid as a share of GDP. We have one of the highest personal income tax, top tax rates globally as well. It's far higher than in developing economies, and it's comparable to those in developed economies. We've also got and had large increases in the rates on estate duties, on transfer duties, on capital gains tax, on dividends tax. So in our view, the system is already very progressive, and particularly because of those direct taxes. And a lot of that revenue goes to the 60% that's spent on the social wage. Just on that table at the bottom, you can see that 12% of personal income taxpayers contribute over 60% of personal income tax. So it's highly progressive already. And the personal income tax is the largest revenue item that we have. So we think we do need to be cautious about these calls. And even if we haven't made a change, for example, in the last budget on adjusting these rates, it's not because the system is not progressive. It is, and it needs to be seen within that context. Even so, we still will look at all of these measures for the next budget, but our position has been that we don't think it's the best course of action to continue increasing these rates as we did in the previous years. We would much rather get additional revenue from improvements at SARS, as well as the other mechanisms that we are doing. We've done quite a bit of work in the G20 this year on, for example, trying to share greater information with other countries on real estate, as well as trying to push for sharing of information on beneficial ownership, so that we can close down mechanisms that high net worth individuals could potentially use to not pay the tax that is due. And that's where a lot of our effort is going towards. Next slide. Just on illicit trade, there was quite a lot of comment on that, as well as how it relates to excise duties. SARS have said that they are going to implement a number of measures to improve the combating of illicit trade. For example, they're going to enhance their regulatory framework, they'll have tougher penalties, they'll prioritize legal action in these areas, strengthen licensing, and have a centralized project management of identified cases. So they are using those mechanisms. They've been given additional resources to try and bolster their efforts in this area. And we hope that there can be a turnaround, especially on the tobacco side where illicit trade is prevalent. We do recognize that illicit trade needs to be considered when we make excise duties. And a lot of the submissions that have been made to us from the alcohol and tobacco industry are considered when we look at what to do in the 2026 budget. Thank you. I can pass on to the next presenter.
Thank you, Chair. I'll continue. So turning then to the fiscal framework and fiscal policy issues, where there was, of course, a lot of questions and a lot of statements that were made. So we proceed to that now. I think the first thing we want to point out, in line with my opening remarks, that views around this are quite divergent. There isn't one view. But what we try to do is we try to strike a balance. And I think what we have tried to do is to make sure that on the one hand, we make sure that there is a sufficient focus on stabilizing the public finances, dealing with the debt burden, and dealing with the fiscal imbalances. And at the same time, also ensuring that we continue to support the economy as well as low-income households in the broader sense, not just through directly fiscal spending, but also through the tax system, as well as the overall macroeconomic policy framework. Both the 2025 budget and this MTBPS propose additions to critical services, and we will show that, as well as additions to infrastructure investments. A key objective of the strategy is to continue to achieve a primary budget surplus, because in a low growth environment, this is critical to ensuring, as the FFC indicated on Tuesday, reducing the debt burden. And the good news in this regard is that we are having success. The budget deficit is narrowing, and debt will stabilize at 77.9% of GDP in 2025-26. This is in line with our strategy from 2023. These achievements will free up much needed resources and strengthen government's ability to allocate in line with development priorities. I want to refer members to Table C6 in the MTBPS that was published last week, which is reproduced here, which shows how the fiscal balances are looking compared to the 2025 budget in May. Of course, there are, in some areas, the numbers are a bit mixed, especially on the main budget revenue, and that's mainly because of the adjustment to nominal GDP. But in general, if you look at our fiscal balances, they are looking better. Debt service costs are down every year over the MTF. The primary surplus is better. The main budget deficit is better across the MTF. And in this regard, we have been able to maintain the real value of government expenditure while ensuring a sustainable fiscal path. And we will show that not only have we been able to do that, but also we've been able to add in a number of cases. Where there are adjustments downwards in non-interest expenditure, these are technical adjustments due to year-on-year growth rates that have to be adjusted or indexed to inflation. They're not cuts to the service budgets of departments. A point was made several times by different speakers about the impact of fiscal consolidation on basic services. Chair, we want to put forward again, and we've done this before, but we want to remind honorable members that our analysis shows a different picture of what happened to basic services. This graph is not new. It's been deliberated on over several years at Cabinet, and we have previously presented it at Parliament as well. The key issue that we have raised, and we have made this point, is that the fiscal balance is deteriorated, and therefore the crowding out effect of debt service costs and lack of ability to fund basic services, all of these things occurred because of inappropriate spending policies, mainly the bailouts of badly run state-owned enterprises, particularly in the period after 2012. And if you look at this graph, you can see why at the same time that over 300 billion rands was spent on bailing out weak state-owned enterprises, we saw a decline in the baselines of those critical services. We consider that the current strategy is reversing both the era of bailouts and the unsustainable borrowing that was financing this, as well as other inappropriate spending policies. Of course, it takes time to fix something that was broken over a period of time, and that's what we are busy doing. And we consider that this is a more accurate reflection of what happened to budget balances over the years. This slide is a reproduction of what was in the MTBPS, so I'm not going to spend a lot of time on it, but it is to make the point that we are adding to critical baselines while at the same time achieving savings in other areas. So since the 2024 budget, we've made additions for wages, including making additions for health and education. We've made additions for the police, defense, and correctional services. We are now making significant additions for infrastructure projects, and the additions that we previously made, the carry-throughs of those additions, are still in the budget and they have not been touched. In addition to that, we have additions for early childhood development, as well as additions for provincial health, unemployed doctors recruitment, as well as goods and services within that sector. The social wage, we continue making this point, and we will continue to make this point, that we have achieved an improvement in the fiscal balances at the same time that we have protected the social wage. We have not reduced it at all as a percentage of the overall budget. We continue to prioritize it. With respect to the overall steps that we're taking to improve fiscal outcomes, this point was raised in particular on the first day of the hearings on Tuesday. We are making we're taking various steps in this regard, and they are on various parts, including on the spending side, the revenue side, as well as the overall fiscal strategy that we will be taking forward in consultation with the President and Cabinet as we go through over the MTEF. These elements were reflected last week to the honourable members and in the public hearing. We are working to lock in the benefits of fiscal consolidation through a widely consulted process of considering how we anchor fiscal policy going forward, so that the challenge that we experienced on the eve of the COVID pandemic, where we were in a weak fiscal position, which then was weakened further with COVID, the risks of that are reduced and the likelihood of that is also, or rather the chances of that happening become less. We are working on improving revenue collection, as Chris was saying earlier, and these numbers are known to honourable members. And of course, we are working to improve the efficiency of public spending through the targeted and responsible savings process, as well as using data-driven approaches to ensure that we remove fraud and abuse through things like the ghost workers, where we are working to remove those from the payroll. Early retirement without penalties is a program we introduced before, and we've spoken extensively about this and its importance. On the expenditure side, as I said at the beginning, we reflect here on what we're doing on the targeted and responsible savings process as a mechanism to avoid across-the-board reductions while at the same time achieving efficiencies in the way that frontline services are funded in government. And those points reflect the different issues that we are working on at the moment, including as identified in the MTDP for us to improve the value for money for all South Africans. In the 2025-26, increases for social grants are above inflation, and we consider that the improvement in the fiscal balances and with fiscal sustainability will gradually give us more space to improve our ability to provide better and sustainable social security. There were questions around the social relief of distress grant. While the current SRD extension continues to provide immediate relief, it is important that we consider that broader reforms, such as a permanent basic income grant, require careful consideration, including balance with affordability, the economic impact, and long-term funding mechanisms within the fiscal framework. And that's something we take very seriously. It's also important to point out that one of the things that is, of course, very critical is that enhancing economic participation, creating jobs, and having more people gainfully employed and reducing the unemployment rate is the most important and most sustainable way in which we can improve economic prospects in the economy. Questions were asked also about the measures to improve efficiency in the grant system and to address inefficiency in that regard. We do want to point out that the measures that we are implementing are being implemented in partnership with the Department of Social Development, and B, these measures are in line with regulations that have been in place in terms of the Social Assistance Act, which has, of course, been law for more than 20 years. So income verification and periodic reviews of social grants are part and parcel of the regulations of government, and they've been there for a long time. They're nothing new. The intention is to safeguard the social grant system. And one of the ways you do that is to ensure that people who shouldn't be taking grants are not taking grants, and ensuring that those who should be receiving the grants are receiving what they should be receiving. There were questions about the HIV/AIDS response, particularly in the context of the withdrawal of PEPFAR funding. Honourable members will be aware that we propose an allocation in 2025-26. We are working with the Department of Health on how to deal with shortfalls over the 2026 MTF, including how we work with other opportunities for donor funding to plug that hole. So that work is ongoing. We do make the point, Honourable Chair, that government already funds the bulk of HIV/AIDS programs. More than 3/4 of HIV/AIDS was not being funded by PEPFAR or any of these measures. It was being funded by the Fiscal, and that funding will continue. There were questions on debt management and the funding strategy, including from the first day of the public hearings. As illustrated in Chapter 3 of the MTBPS, and as we normally indicate in Chapter 7 of the budget review when we table the main budget, the gross borrowing requirement of government is the sum of the annual deficit, the loans that are maturing, as well as, of course, most recently, the Eskom debt relief arrangement and the GFECRA settlement. We are very transparent about the way in which we make borrowing decisions, and we publish these decisions, and the benchmarks within which we make those decisions are also published. And there we indicate that we need a balance between liquidity management, managing the risks of refinancing. In other words, as all debts become due for repayment, we have to refinance. And so we have to manage that risk and not ignore it, as well as, of course, the cost of borrowing. And to meet the funding needs, we employ a mix of instruments in order to be able to manage these things. So we can't just look at one thing when it comes to our borrowing program and our bond issuance program. We have to look at the totality of risks and pressures and considerations in respect of doing that. As I've said, we have strategic risk benchmarks for that. We publish those benchmarks. Anybody can go and read them, how we make the decisions around the management of both the borrowing strategy and the debt portfolio. There were points made about how we should manage the bond issuance. It's important to try and distill the message down, sort of get away from the complications by making the point that when determining which bonds to issue, the government needs to consider the demand across different categories of the investor pool. A lot of the people that buy our bonds, pension funds represent private pensioners, and as well as insurers. Most of the debt, as everybody knows, is domestic, but we do have some foreign debt as well as foreign investors. As we indicated, the gross borrowing requirement for the current year has gone down. And part of that, a big part of that actually, is because of the improved confidence and therefore improved risk assessment of South Africa as a result of the steady success of our fiscal strategy. That's been the unequivocal feedback that we've received from investors across the board with respect to what's happening on the borrowing side. It's also important for me to reflect again, Honourable Chair, that we continue to use the GFECRA settlement to help with the pressures on the borrowing side. With respect to the issue of international financial institutions, we provide in our documentation an outline of every financial institution from which we borrow. It represents a small portion of the overall borrowings of government, and as we have indicated, we do this because the rates of interest that are sometimes charged for some of these loans are cheaper, but the loans are also specific to particular projects, and so they're not related to our overall fiscal strategy in any way, shape, or form. They are related to typically specific projects, particularly in infrastructure, especially loans that come from the World Bank. It's also important to indicate to honourable members, as members will know and as the general public knows, South Africa is fairly unique, particularly in the African continent, for having such a depth and liquidity of financial markets. And halfway through the year, the ownership of our domestic government bonds is 25.7% foreign investors. Pension funds are 21.8%. Monetary institutions just over 20%. Other financial sector institutions like insurers are 23.4%, like other investors are 23.4%, and insurers at 7.5%. The bond auction program is an open, non-discriminatory program. In other words, the auctions are open. They're accessible to the full spectrum of market participants. The National Treasury does not impose restrictions on primary market participation of the what kind of investor type may go in, as such investors, or rather as such interventions would contravene the frameworks governing market access, and they would also risk undermining price efficiency, liquidity, and the overall cost of funding. The issuance framework, the primary issuance framework, is rules-based. It's transparent, as I've said repeatedly. It operates through competitive auctions that facilitate broad investor participation and market-determined pricing. This approach is consistent with international sovereign issuance standards and reinforces the integrity, depth, and credibility of the domestic capital markets. The secondary market activities are predominantly undertaken by private sector intermediaries and institutional investors whose trade, positioning, and derivative activities ensure continuous price discovery and liquidity provision. The Treasury's role is limited to targeted liability management interventions, principally through scheduled monthly switch auctions, which are designed to smooth the redemption profile, support benchmark liquidity, and maintain the orderly functioning of the market in line with global best practices. This slide is well known. We've shown how we are stabilizing debt. There were questions raised by some about the level of stabilization. Some people expressed some concern that it's stabilizing at 77.9 rather than 77.4%. I wish to remind honorable members that our fiscal strategy that we communicated more than 2 years ago did not identify a specific number or level of stabilization. It merely identified a point, and that point is 2025-26. So we're comfortable that the strategy is very much in line with what we announced. And the reason why we didn't choose a number is because the fiscal ratios, including the debt ratio, is affected by nominal GDP. And we understand that. And so because the denominator can move up and down, and indeed it has moved up and down. There was a year where it went down to 74. There's another year where it was as high as 88%. And so we're quite comfortable that what we have here in terms of the debt trajectory is very much in line with it. And all the ratings agencies agree, as well as all of the analysts that we've worked with. That, in fact, we're in line with our own strategy. There's nothing about what is happening at the moment that is out of line with the strategy that we've announced. With respect to state-owned companies, we want to make a couple of points in response to the questions and comments that were raised. First of all, with respect to support for state-owned companies, such as the big support for Eskom as well as Transnet guarantees, all of these have conditions. So the recapitalizations are conditional, guarantees are conditional, and indeed the debt relief program of Eskom is conditional. Parliament passed an act called the Eskom Debt Relief Act, which makes provision for conditions on Eskom. So the issue of conditions is we believe, very much well in hand. We have tight monitoring of the compliance of these conditions, and we provide reports to Parliament on these from time to time, or as requested by members, including when we have to answer, for example, parliamentary questions. With respect to a number of organizations, we have routinely announced and indicated various reorganizations and other reforms of these state-owned enterprises, not only to improve their effectiveness, but also to ensure that they are financially stable. One of the things that is very important, and we have highlighted for quite a long time, beginning in the 2024 MTBPS, is the importance of crowding in private capital. In other words, creating partnerships with the private sector in order to help roll out a number of public sector projects. There were questions about the credit guarantee vehicle. I'll step on that a bit later, but I think it's important to point out that the key purpose of the credit guarantee vehicle is to help de-risk private investment. It's part of the crowding in process. So the projects remain the projects of government, but it's good to have partnership with the private sector where that partnership can be provided while the projects remain government projects. But the credit guarantee vehicle helps to de-risk that, but I'll come back to that in a minute. With respect to public infrastructure investment, this is a key pillar of the growth strategy, as Yolande was indicating earlier. It's about lifting growth, it's about creating jobs, and it's about strengthening service delivery. In the 2025 budget, we indicated that across the spectrum of government, state-owned enterprises, local government, provincial government, and of course national government, there is now over R1 trillion over the MTF dedicated towards infrastructure investment. And as I've indicated, we are collaborating with the private sector to augment the limited public finances and instances where the state capability is weak. Now, the augmentation is not just about increasing the amount of money that's in the pot. It's also about improving capacity. And we believe that those partnerships can help create the kind of cross-pollination where capacity can improve over the long term. Part of that includes the improvements in the P2P regulations, creating a clear, structured way for the private sector to submit ideas. Thirdly, the creation of various program offices that are working to streamline planning and procurement. This is happening in particular in the water sector. And then fourthly, and as I said, I wanted to come back to the issue of the credit guarantee vehicle. The CGV is there to de-risk the public sector projects by providing guarantees that protect investors against early stage project risks. This makes long-term investing more attractive with reduced risks and resulting financing costs. The CGV does not require sovereign guarantees, and it is about providing those de-risking support to the private sector. The introduction of new financing instruments to broaden the pool of capital investors, reduce financing costs, and reduce reliance on the fiscus is also another important part of our process. Chair, for the sake of time, I'm not going to go through each of these points, except to make the point that one of the things that's, of course, very important is that the reconfiguration of the budget facility for infrastructure will help with improving the project pipeline. And we are using the BFI to really provide support and financing across all parts of the state, including, for example, municipalities. You will have seen in the proposed budget that one of the proposals that's come through from the BFI is support for big water treatment projects in Polokwane. The National Treasury is also consolidating several offices into a new agency. This is old news. We announced this originally in the 2024 MTBPS, but that work is currently ongoing. One of the big issues we're working on is cutting red tape that's frustrating the progress of infrastructure projects, and we are working with the Office of the Chief Procurement Officer in that regard. Chair, as I go to a close, one of the last things I want to reflect on is the public service wage bill. There were a number of points that were made with respect to this. First of all, we do want to acknowledge the fact, and I think it was part of my earlier reflection on what happened in the period after 2012. We do want to acknowledge the concerns about the pressure on frontline services and what has happened over time to the erosion of those services, particularly in education, health, and police. We are working very hard to try and restore those services. We are going to continue working to find ways of adding resources to those, adding resources to have more police officers, to strengthen the defense force, to strengthen the correctional services in the country. So that's very much a focus of ours. Of course, we have to fix the legacy problems that have occurred. And in addition to that, we also have to deal with existing inefficiencies and abuse, such as I've indicated, ghost workers in the system. We do want to point out that we, as part of our commitment to the public service wage bill, we continue prioritizing adding to frontline services as reflected here in this slide. And so, we acknowledge the need to address this, and we will continue making the appropriate adjustments in order to ensure that those services are strengthened. Chair, I'm going to stop there. And one last point, there are a lot of annexures to this presentation after this thank you slide. For the sake of time, we've obviously distributed it, and I hope all honourable members have it. But for the sake of time, I'm not going to go through all of them. But we're happy to take questions on any subject, either in what we've spoken to here or what is in the annexures. Thank you very much for this opportunity, Chairperson.
Thank you, Edgar, and the team of National Treasury and SARS. Mangwen and Alan, can you flight back the agenda?
Can you see it, Chair?
Yeah, thanks. Let's proceed to item 3, comment by participants, 3 minutes each. Let's start with Comrade Matthew Kosatu. Over to you. Please, colleagues, stakeholders, have a timer in front of you. Technology is advanced now. You put 3 minutes there, and then it goes down to 1, then 0, you stop. I don't have to disrupt you. Starting with Comrade Matthew, who's our colleague in this platform. You have been here for many years, so you know them very well. So lead by example. I know you have got a lot to say, but you heard that members are rushing to other commitments, so we want them to engage your presentation while they are still here. Over to you, Comrade Matthew.
No, thanks, Chair. Morning, Chair and members. So I think just to jump straight to Chair, look, I think there are many positives that we've seen in the budget that we have fought for ourselves as COSATU. Exiting the grey listing, investing in SARS, overcoming load shedding, stabilizing Transnet, Metro Rail. I think first, Chair, where we differ with colleagues in Treasury is that we are fundamentally still stuck in an economic crisis. Over the MTEF, we have 1.8% growth estimates. We remain with 42%, and that won't form substantially, even with the Treasury projections. So I think first, that's what we need to reposition the budget to deal with. We'd really hope to see more rebuilding public services on the front line, like home affairs, police, etc., health, and so on. We do acknowledge, Chair, there is some interventions in local government, but given the deterioration of municipalities, not just in rural areas, but in our cities, we think, Chair, we should be pressing the alarm bells. If municipal debt to Eskom each year is increasing by 20 billion rand, Chair, that is a national crisis, and it's going to threaten even Eskom's turnaround. We do think we need to give more support, Chair, to Eskom to deal with the issue of half of its customers not paying for electricity, which plunges Eskom into this spiral of above inflation tariff hikes, which then squeezes the industrial manufacturing sectors and working class families. And of course, to give more support to Transnet, to Metro Rail, which are key unlockers of growth. Chair, even when you look at the MTEF, we do see below inflation adjustments for law enforcement. And that doesn't make sense to us, Chair, when we have such high levels of crime, especially in townships and working class communities. We had also hoped, Chair, we'll continue to push. If we have 12 million people who are unemployed, we need to be expanding the presidential employment stimulus. We need to be mobilizing resources, not just from the fiscus, but from the DFIs, the private sector, to really provide a pathway to millions of people who are unemployed. And we really hope, Chair, to see a similar approach again with regards to stimulus. The amount of money we're allocating is just not enough to get us a 3% growth. So again, how to mobilize, how to coordinate with the DFIs, with the private sector to really have a mass industrial SME financing program. Chair, when we've seen many companies struggling this year because of whether it's the US tariffs or electricity tariffs or global restructuring, etc., we need to move to action. Can we give tax rebates to struggling companies? Can we give industrial incentives or subsidies? Can we fix the UF-TERS to give relief to these companies and workers? And similarly, Chair, we had hoped, but we can't understand why, Chair, within the 5 years of the SOD grant's existence, we've only found it once appropriate to adjust for inflation. We hear all the long-term issues, it's fine, have a debate, but Chair, we should be adjusting it annually for inflation. I think first, that's just unacceptable. Chair, we have seen some initial movement around rolling on the Public Procurement Act. We need to expedite that, Chair, again, to help reduce corruption, etc. We'd also hope, Chair, to see the Ghost Posts audit be extended from the public service to the sector entities, to the SOEs, to municipalities, and of course then to fill those vacancies with teachers, nurses, police, etc. Chair, I think just getting to the end, we really want to say that let's not move towards tax increase upon workers or middle-class families. Let's ensure we have a PIT bracket adjustments for CPI for those bands. And in fact, Chair, what we need to be doing is to give more support to the South African Revenue Service. They've already met their targets, which we set earlier this year. We should be having a target for them to reach 75% tax compliance over the MTEF. That will resolve a lot of the fiscal pressures, enable the state to invest more in the economy, provide more relief to workers, etc. So I think for us, Chair, that is the fundamental issue around SARS. Give SARS resources they need to improve tax compliance, be it around customs or illicit goods. I think lastly, Chair, we will continue from our side to engage with Treasury as we prepare for the budget next year. And we really hope to see a much more aggressive stimulatory approach towards the budget next year, including resolving the next phase of the two-part pension reform. So let me stop there, Chair, and hopefully I stuck to the 3 minutes. Thanks, Chair, members.
Thank you, Comrade Matthew. Mongwen, Alan, which one is the next stakeholder in the program? There we are. BJC.
Thank you, Chair, and thank you to the National Treasury for the presentation. I think we just have a few comments. We appreciate the commitment to take away the tax proposals and consider further. In the presentation, the Treasury argues that we have a highly progressive tax system, but our argument is that we are still one of the most unequal countries in the world, and we don't seem to have made any progress at shaking this label. And we think that we must make more of an effort. Our argument has been that when times are hard, who should chip in? We're talking about families who are giving up overseas holidays, or poor households who are already making trade-offs between food, healthcare, electricity, and safe drinking water. So, we'd like to see this the response considering all the various aspects and factors. On the inflation targeting, I think we agree that price stability is important, and that poor households are worst impacted by rising costs. But we didn't really see much in the presentation about how about interest rates and how the change in target will impact indebted households and the cost of borrowing and manufacturing. We were quite alarmed by the findings of the IMF report that suggested that we could lose up to 200,000 jobs. These are significant impacts. We welcomed the rate decrease yesterday, but we're not really convinced that means that they couldn't be increased in the future. So we would like to see a response with a few scenarios to give us some comfort that the long-run benefits do in fact outweigh the short-run costs, and whether there will be any measures in place to cushion the impact on the most vulnerable. We're thinking about things like floods, disasters, unrest, global shocks, disease, supply shocks that have an impact on prices. On the increases to social spending, we've identified large gaps in health, education, basic services, etc. Some of the interventions, freezing posts, the vacancies, etc., they impact how allocated funds are effectively spent. And we'd like to look into that a little bit further. And finally, we speak a lot about market sentiment and investment, but we haven't really seen how these translate into decent jobs for millions of South Africans. And this is something that we think really requires a lot more attention. As the previous speaker said, this is we are facing multiple crises. And I will leave that there. Thank you very much for the opportunity.
Thank you, BJC. IEJ.
Thank you, Chair. So my comments will really be around two issues, one on transparency and the other on spending pressures over the medium term. So one, I think the National Treasury and the committee can appreciate how difficult it is for us as the public to engage effectively on policy decisions that are made without publication of the full documents that inform them. So I think we would really appreciate if, as the National Treasury says, they will consider these tax proposals. I think in the same way that has been done with the process of the new fiscal anchor, it would be good if those documents were published in terms of consideration of new tax policies. And then secondly, on the issue of the gold and foreign exchange contingency reserve account, GFECRA, page 29 of the MTBPS says that the buffer has been increased from 250 to 260 upon a review that was done doing a framework that using a framework that the IMF developed. And I'd like to point that in the GFECRA settlement agreement, it precisely clause 7.2.4, it explicitly states that the South African Reserve Bank shall present both of the estimated adequacy levels mentioned in the previous clauses, which refers to the 250, and that this will be shared with the Standing Committee on Finance for their deliberation. I'm not sure if I missed anything, but has this actually been done? Has there been a consultation with the Standing Committee on Finance on this new increased buffer? And then to the point on spending pressures, the debt stabilization program of the National Treasury is premised on achieving these primary surpluses. And over the past 5 years, we have known that cost pressures have arisen from things that were unfunded, and yet the National Treasury had to end up committing to, such as the SRD grant, compensation of employees, and bailouts to state enterprises. We want to ask, Chair, what happens when these spending pressures arise? As it has previously been done so in the last 5 years, what will happen for spending overall, given that we are in the context where National Treasury is committing to the baseline spending level? What will happen to overall spending? How will other items be affected? Will this, for example, put unnecessary pressures on programs to be closed down or scaled down? Thank you so much, Chair.
Thank you, IEJ. Alternative Information and Development Center.
Thank you so much. I'm just going to turn off my video because of internet. So thank you for the presentation. Any improvements in the deficit is because there's an over-reliance on expenditure to stagnate and decrease, which has disastrous impacts on service delivery. Treasury also claims that its plan will stabilize debt and generate a primary surplus, yet figures show debt service costs rising over the medium term by an average of 0.6% in real terms. Debt service costs as a percentage of main budget expenditure continue to increase in 2026 and 2027. In 2028, this percentage stabilizes, but it is still higher than this year or previous years, meaning it will continue to and keep crowding out vital spending on health, education, and social services. Of course, there's the argument of what about the counterfactual, that maybe if we did not do this approach, then debt servicing costs will not stabilize and over time capture a greater and greater share of our budget. But there are more direct ways to reduce debt servicing costs, such as through the SARB or the GEPF. Inflation in South Africa is largely driven by supply-side factors, such as oil prices. We are in a relatively lower inflation environment now because oil prices are expected to stabilize. While the central bank did announce a rate cut yesterday, they also admitted that this is influenced by the expected price of oil. Even though inflation is largely influenced by supply-side factors, the Reserve Bank tends to follow the US Fed. And this, once again, was shown yesterday with a cut of 25 basis points following the announcement by the US Fed in September this year. The new inflation target is extremely concerning given South Africa's low growth and high unemployment environment. The 2-year horizon that the SARB has is good, but what happens if there is an oil hike or trade war after these 2 years? It would mean a rapid rise in inflation, meaning that the SARB has less room to not implement a rate increase. Under this scenario, we will have higher interest rates. This means after we experience nominal declines in GDP and reductions in revenue in the short term, we will then experience higher debt servicing costs, and the so-called long-term benefits won't materialize. The financial sector will capture higher interest payments, but at the expense of both households and the state. Most importantly, this drop in the interest rates that we saw yesterday would still have been possible under a higher inflation target, given that inflation expectations are being driven by expectations in the oil price. And this is, and also that since the US Fed acted in this way. We are ultimately cementing ourselves into very risky parameters while pretending otherwise. Furthermore, the government's progress report on Operation Vudanlela is silent on the core issue of jobs. Employment is mentioned only in relation to about 1,000 tourism jobs, and gross fixed capital formation, a key indicator, is omitted, despite data that shows that gross fixed capital formation is declining. With the World Bank stating that 2% growth is insufficient to tackle unemployment, the current fiscal trajectory fails to set us on a path to meet developmental goals. Treasury's promise that structural reforms will lower costs in electricity and water is also misleading. The reality is that PPPs lead to a shift to cost-reflective tariffs, and there are already dramatic price increases in electricity that erode the living standards of the poorest households. While additional allocations to frontline services are noted, they are vastly inadequate. Funding for new teacher posts, for example, only covers 18% of the existing shortfall. And this is assuming that this is going to new teacher posts, not to just protecting existing posts. This ultimately fails to address critical overcrowding and vacancy rates in schools and clinics. And just a last point about taxes. So we are asking for tweaks to increase tax progressivity, not blanket tax increases. We welcome members and Treasury to read AIDC's Fair Tax Monitor for further information on the different mechanisms and proposals. There is a difference between the highest earning South Africans and the highest earning taxpayers. There are 100, like the SARS Commissioner mentioned, that there are 100,000 million South Africans with economic activity of above 1 million rand who do not pay tax. There are measures that can be put in place to make tax evasion and tax avoidance harder to do. Most importantly, the small tax base that was referred to is a reflection of our extreme levels of inequality. In the world's most unequal country, the tax system can and should be working a lot harder to make tangible improvements in reducing inequality. There are extremely strong arguments to be making for increasing tax progressivity, and this is in line with G20 themes. Ultimately, spending on the social wage is insufficient if egregious constitutional and human rights violations payments take place because of funding constraints. This includes, for example, levels of child hunger and deaths caused by malnutrition. Thank you.
Thank you, Alia. PEP.
Thank you, Honourable Chairperson and members. So thank you for the opportunity and for the back and forth we're having, and that's one of the strengths of our democracy. Honourable Chairperson, a lot of our inputs were surrounding the decision by the Minister of Finance to move the inflation target from the band to a single point. And we effectively communicated in our presentation that this MTBPS is just responding in the main to this major policy change. So on the consultation process, Treasury explained earlier that it followed the same consultation process it followed in the year 2000, consulting the President and Cabinet. So we respect that this is a process, but the context has changed quite a bit over the past 25 years. And Treasury this morning noted its attempts and its overtures on consultation, and these have been important. We've participated in them regarding the fiscal anchor and public expenditure choices that needed to be made and will be made going forward. However, on such a big decision regarding the shift of the inflation target, there hasn't been public consultation. And this has major impacts on the outcomes of public finances, the delivery of public services, and the sustainability of public finances, and effectively the state going forward. And given our history, we feel this should have certainly been front and center in consultation. Secondly, on the evidence base for the decision and the coordination framework, when we reviewed Treasury's 2024 macro fiscal review on page 35, notes quite explicitly the imperative of showing evidence before any move is made from an inflation band to a single point target and shifting the inflation target. And with the exception of one reference, there's no authoritative set of evidence that has been put forward for this decision, and we would welcome that to be more explicit. Similarly, in that same macro fiscal review of 2024, Treasury notes the importance of macro fiscal coordination to be given meaningful expression and for decisions to be articulated, and the impact of macro and monetary decisions on fiscal policy and fiscal outcomes, and fiscal policy and fiscal outcomes on monetary outcomes and monetary dynamics to be given full expression. And we haven't seen that despite this being in Treasury's 2024 macro fiscal review. So with those 2 points, Honourable Chairperson and members, we would like to have more robust engagements and more explicit articulation of the rationale, given this massive impact it has on the outcomes and the livelihoods of South Africans. Thank you very much for the opportunity, and we look forward to more engagements going forward.
Thank you, PP. Amanda Mobi.
Chair, it doesn't look like they're on the platform.
Okay, thank you. Breadline Africa. Breadline Africa, are you there? Okay, if they join, we'll allow them to speak at the end. Families for Children. Families for Children. Alan Mangwin, even Families for Children are not in the platform.
Sorry, Chair, we got an email a few minutes ago from them to say they are unable to attend today. Thanks, Chair.
Okay, thank you. Saika? Saika? It looks like they're not also in attendance. South African Breweries?
Good morning, Chair, and thank you to the National Treasury for the presentation. I think our main point was fairly covered by Chris Axelson in terms of the tax environment, but I would like to note in particular, he did mention that at the end of December is when the final call will be made around the nature of the tax gap, or essentially the revenue gap rather, and whether there is a need to use tax instruments in the current fiscal environment to support the fiscus in general. And in that sense, is it possible then to ensure that the Section 32 that is released in January, that is a reflection of as much data points that will inform Budget 2026, does provide more information around the nature of revenue and perhaps the tax outlook thereof? I think there is an opportunity in the transparency of the budget cycle post the MTBPS in particular, as it relates to revenue collection in general, that does inform Budget 2026. And one of the key, as you said, one of the key tax proposals that we have made is some sentiment around the direction of perhaps what the futuristic budget might look like. But I think in the information that is shared by National Treasury outside of the MTBPS, that being the Section 32s, in particular, I think there's an opportunity to provide detail around the revenue in an analytical form that does inform the nature of the revenue gap, and some of the revenue efficiencies, I think, is also a commentary around that gap being closed, because I do think that would be a good sentiment and an indicator before the tabling of the budget, at least, that would give us a sense of the tax outlook. Thanks, Chair.
Thanks, Fatsan. I see Dr. Beck is raising his hand. I responded to what he has written on the chat. Dr. Beck.
I haven't seen what you've written back, Chair, but happy to peruse that and then come back in later.
I showed the thumbs up.
Perfect, Chair. Thank you.
He said I will request that we keep a record of organizations that keep a slot to speak who then fail to show up or cancel on the day. So we'll do so. We'll keep that record. Are you there, Dr. Beck? He seems to be having a challenge of network. Okay, Dr. Beck. The last, I think, is Dr. Sean Muller.
Good morning, Chairperson. Good morning, Honourable Chairperson, Honourable Members. Thanks for the opportunity to respond to the National Treasury, and also thanks to the Finance Committees for facilitating this process. The response process has really added a lot to the oversight of the MTBPS and the budget. I'm going to be a bit direct. Also, in future, it would be great if we could share our screens, because I usually try and put together a presentation for this response. But I'm going to be a bit direct because of the shortness of time. The National Treasury's repeated statements about cost of living and poor households, I really think at this point constitute either misleading Parliament or incompetence, and I don't think that should be tolerated. I was diplomatic about it in the lockup when I asked them about it. I was diplomatic about it in my previous presentation. At this point, I have to say they're misleading Parliament. Their statements are false. The change in the nominal price level is not an adequate basis for assessing cost of living, because you have to take into account income. And a good example of this is social grants. If somebody's social grant is going up by 5% every year and prices are going up by 5%, it's the same as if they go up by 3% and 3%. Okay, so they need to stop making these statements. It's very concerning to me that they are misleading Parliament. On the issue of the process, it's good that National Treasury now acknowledges that Parliament does have substantive oversight powers over this process, but then that supports the view that there should be substantive hearings. I also want to add, in relation to my previous presentation, I went back and checked the dates. The Promotion of Administrative Justice Act commenced after the inflation target was adopted last time. So there are new legal requirements that also need to be respected, and that potentially changes the process required this time around. I also want to say that the reduction in the repo rate doesn't prove anything in terms of this debate, because it really actually supports the view that SARB was keeping the repo rate artificially high, and arguably it cut that rate as part of a political economy process to support its position on the inflation target, not because there's any causal link between the Minister of Finance's announcement about the inflation target and the actual fundamentals. On a few other issues, this debate about income taxes on high earners, I've raised that in previous presentations. I didn't mention it much in my recent one. The tax system is indeed progressive, but as other presenters have mentioned, we have a highly unequal country. So the progressiveness of the tax system needs to actually match inequality. The second issue is the SRD grant. The MTBPS suggests a complete pivot away from a grant. But today in the presentation, National Treasury referred to still the possibility of a basic income grant. Okay, so that's inconsistent. And again, it just suggests that much more information is needed and some proper hearings are required. There was no response in the document from the National Treasury about the specific point about the real erosion, the erosion of the real value of the NSFAS threshold. I saw what they said about needing a more comprehensive funding framework. I support that, but that specific issue does need to be addressed. Finally, also on the road accident fund, again, the National Treasury doesn't state a view as to the fiscal implications of the debates that are happening in SCOPA about the accounting practices. If those aren't fiscally important, then arguably SCOPA is wasting its time and National Treasury should go and tell them that. Or if they are fiscally important, then National Treasury should explain to the finance committees what the potential implications are. One last thing, Chairperson. On the issue of frontline services, National Treasury was warned 10 years ago about the implications of the approach they were taking to cutting expenditure, and there hasn't really been any accountability for those consequences. Thank you, Chairperson.
Okay. Thank you, Dr. Muller. PBO, are you there?
Yes, Honourable Chair. Good morning to all honourable members and other colleagues. Just some few inputs from the PBO. The first is that it is still not clear from National Treasury's response how the fiscal framework aligns with the MTDP, the NDP, and the developmental objectives as set out by government. As already stated by other presenters, there's been disproportionate impact of fiscal consolidation on the poor, who rely most on basic services. So as much as we can say that 60% of non-interest spending is allocated to the social wage, but this is also being eroded by population growth, inflation, and all other impacts that have happened, which have already been stated earlier. So this needs to be assessed. To what extent has the pursuit of fiscal consolidation and active implementation led to the erosion of public service delivery? We also want to emphasize that fiscal credibility is not just about pursuing a budget surplus, but about whether the state can deliver services and guarantee socioeconomic rights, as well as achieve the developmental targets of the state. Treasury argues that low inflation will permanently reduce price-setting behavior and cost of living, particularly to the poor. However, the PBO's position is that inflation for low-income households is structurally driven by administered prices, food and transport costs, categories that will not automatically fall simply because the inflation target is lower. Treasury's own data shows that electricity, water, education, and fuel have grown far above the CPI between 2009 and 2024. So this is important to consider, which other people have already stated on this platform, to say that just because the inflation targeting is lower does not necessarily mean that low-income households will experience a lower inflationary pressure on their cost of living. It is also stated in terms of revenue, the question is always, and I think this has already been stated, the question is, tax is a redistributive tool. So the fundamental question should be, to what extent is our tax system redistributing adequately income and wealth in our country? It is stated that in the 2026 proposals for tax might be withdrawn, but at the same time, in the same budget, it is stated that the revenue projections for 2026-27 and 27-28 are actually lower than the budget 2025. So what this is to say that if we are anticipating lower revenue in the outer 2 years, then why would we withdraw potential tax policies? And then lastly, just to speak about the SRD, to say that there needs to be decisive action taken because beneficiaries cannot live in this uncertainty, and that we need to take seriously the progressive realization of rights, but also, and this is my last point, Chairperson, to state that what has not been highlighted in this budget is how the reduced inflation expectation means declines in expenditure for different sectors. It also doesn't address how these different function groups and expenditure at national, provincial, and local government will be impacted by a lower growth rate in allocations. Of course, plans have already been made which are forward-looking. So how do we expect these departments to pivot in a short period of time to lower allocations in the medium term because the inflation target has been adjusted? So we anticipate that there will be some issues there. And as many ministers have highlighted, they continue to experience expenditure, pressures, especially in health and education, which has continuously been repeated. That is all from me. Thank you.
Vusi, are you done?
Yes, Honorable Chairperson. I stuck to my time. Thank you.
So it's only you who's responding today?
Yes, that's only me from the PBO today.
Thank you, honorable members. Thank you to stakeholders. Now we are proceeding to item 5. I hope Honorable Mautwe and Mazibuko are still in the platform. We have not eaten into your time.
We're here, Chair. As I raise my hand, thank you.
We're here, Chair.
Okay. Honorable Beasley, Honorable Dr. Beck, Honorable Van Rooyen, Honorable Mautwe, Honorable Swart, Honorable Makuela, Honorable Squati, Honorable Mazibuko. Yeah. Honorable Beasley, over to you.
Thank you, Chair, and greetings to everybody on the platform. So I think in the public participations, there's been a big plea in terms of excise tax not to increase it above inflation. And I think as National Treasury, as government, as Parliament, we need to hear that. But I think because National Treasury in their slide says acknowledges the problem of illicit trades as it undermines government exercise policy's objective. But it undermines far more. I mean, I'm not part of the GNU, but it talks about, inclusive growth and job creation. By allowing the illicit trade to flourish, we're undermining the legal economy. So it's not just about excise policy. It needs to be looked in the broader mandate. And again, I just say, by increasing excise tax above inflation, we're just scoring a massive own goal, which we just can't afford to do. It's not about tax revenue. It's about the economy. And I think we need to look at it in that perspective. We can't have a narrow view and say it's about revenue, because we might be collecting 5 Rand on one hand, but losing 50 Rand on the other. And once the illicit market gathers strength, and we've seen it in the cigarette market, it's very difficult to come back. I mean, I was chatting to a guy yesterday in the car and just telling me how much he pays for a box of cigarettes. I mean, the legal companies just don't have a chance. And then National Treasury also said there's been like budget allocation to increase the enforcement on the illicit trade. I mean, it's so important. Is this budget allocation part of SARS's past allocation, or is National Treasury looking at beefing that? Because it's imperative. We need enforcement. Without enforcement, the illicit trade is just going to carry on flourishing. And then Jeff Crow, I don't know if I'm pronouncing it right, how much more funds is still available for National Treasury or for government to use? And then lastly, I agree with Mr. Muller, and also Kasatu raised the point about RAF. We're missing a big point here, because RAF has been intentionally, illegally undermined to limit the amount of claims paid out. And there's a big train crash coming to the fiscus. And National Treasury, it has been raised by the public. We need to open our eyes to this, because we can't just put our heads in the sand. There's a big train crash coming, and it's coming very soon, Chair, because with the new board and new CEO, things are going to change very quickly. The illegal capturing of claims is going to change, and there's actually going to be a flood of claims, and National Treasury somehow needs to make a provision for that. Thank you, Chair.
Thank you, Honourable Beasley. Dr. Beck.
Thank you, Chair. I'd like to start by thanking National Treasury on a number of fronts. It's clear that this institution is not afraid to make decisions that may not be universally popular, but decisions which have at its core the long-term well-being of the country and all its people in mind. And that's exactly what you want from the National Treasury. I would like to hone in on a particular issue, which is debt guarantees, and just get some clarity here. In 2023, Transnet received a 47 billion rand government guarantee. In February this year, National Treasury told Parliament in writing that only 23 of the 32 conditions attached to that debt guarantee were met. And despite this, Treasury issued a new 51 billion rand guarantee in May, and then another guarantee worth 49 billion rand in July. And I want to understand, were all the 9 outstanding conditions met before these new guarantees were issued? And if you issue a guarantee, and even when not all the conditions are met, you issue another guarantee, and then yet another one, is it not fair to instead stop calling these so-called conditions, but rather strong suggestions? And then following up from last week, Chair, on public-private partnerships, we were promised last Friday a list of all the PPPs in the actual build phase at the moment. Is this in the annexure? Am I not seeing it? That's all from my side, Chair.
Thank you, Dr. Beck. Honourable Van Rooyen. Mutombe Van Rooyen.
Thank you very much, Chairperson, and a very good morning to you and, of course, to all who are in attendance. Let me start by appreciating the participation of stakeholders and the response received from National Treasury and SARS. So maybe let me start with the Road Accident Fund saga. We just recently received information that a payout of not less than $500 million was processed by and approved by the new board to a foreign claimant. Now, I'm not sure because I'm a bit worried that technically just claims might be manipulated by foreigners. I mean, to obviously tap into the Road Accident Fund coffers. My question to National Treasury is, what are the provisions that are in place currently to make sure that such processes are not abused by foreign claimants? Because, I mean, paying, I think there is a record highest payment so far, or payout so far, of more than $500 million. What are the provisions in place to make sure that such processes are not abused, either by South Africans or foreigners, as they make these exorbitant claims? Then secondly, Chair, the issue of involvement of the private sector in the provision of constitutionally enshrined basic services to our people, versus the need, I mean, to obviously safeguard our poor people from high prices that are usually experienced when such services are provided by the private sector. And I hope this question is not going to be misconstrued to be meaning we shouldn't bring private sector on board. Our concern as MK Party, as a party that is pro-poor, is to make sure that our people are forever protected from exploitation and high prices by the private sector. So we want to know, as we bring private sector on board, what mechanisms or measures are in place to make sure that our people are not taken advantage of, or maybe our people are not going to be subjected to high prices and exploitation by private sector. But also we are equally concerned about private sector participating at the expense of building the state capacity. How do we strike a balance? Or maybe how do we make sure that as private sector participate, our commitment to build state capacity is not compromised, because the state must forever be at the forefront of providing public goods and services. Linked to that, Chair, we have just seen the National Treasury acquiring a loan from the World Bank of 15.9 billion. And it's stated that this loan will be used to capacitate municipalities, I mean mainly metros. The question here is, we are not informed as this committee on the conditions of this loan, but also we are not informed as to how is this loan not going to allow World Bank to take over provision of basic services, the responsibility of municipalities, from municipalities. Because World Bank is, we all know, with all its, what you call restructuring programs, it has messed up governance and it has messed up sustainability of development programs in most countries. So our concern is that if we are not informed as this committee about the conditions of such loans, we will definitely find ourselves wanting at the tail end of this process. But linked to that, is the fact that we are speaking of stabilization of our financial ratio, that is the GDP to the ratio, the debt to GDP ratio, and stabilizing the management of debt service cost. So I just wanted to hear from National Treasury, this loan, how is it going to, its impact on this financial ratio trajectory? How is this loan going to impact on the trajectory, the envisaged trajectory of debt to GDP ratio, but as well as the service cost, the management of the debt service cost as projected currently in this fiscal framework? How is this going to impact that trajectory? Thank you very much.
Thank you very much, Chair. Greetings to the honorable members, to yourself, Chair, and to the stakeholders and the National Treasury. Chair, I want to start off by expressing our disappointment and dissatisfaction in as far as attendance by the National Treasury leadership is concerned in our committees. We've raised this before, a couple of times, by the way, and the last time we were told that the minister is sick. And we made an observation that the minister is either sick or is out of the country, particularly in the US. And when he's supposed to come to this committee, those apologies are being tendered. We're in the process now of looking at the MTBPS. The minister came, presented, and met with us as SCOF, and that was the end of it. He did not attend stakeholder engagements. He's not in this meeting today. And that is the head of the National Treasury, political head, who, at the end of the day, is the one who signs off in terms of the policy direction of this country. Now, it can be correct that such mandates and authority by the Minister of Finance is not being taken care of. The stakeholders who came here, Chair, they shared their frustrations and everything and expected the head of politics in the National Treasury to respond to them. But instead, we see a delegation that is led by Dr. Edgar Sishi, the DDG, who is also not even in the organogram of National Treasury, by the way, as it appears on the National Treasury website, dated 31 July 2025. Maybe we can give it to Chris because he's there on the organogram. But I'm just showing how the National Treasury is treating Parliament and treating the people of South Africa on a very fundamental issue of policy position of this country. The minister is not here. The two DGs are not here. Two deputy ministers are not here. The DG is not here. And a delegation is sent to discuss and respond to issues. It's clear that they don't have mandate to change anything, to effect anything significant that came out of the MTBPS that is going to affect our people. So once again, we raise that disappointment, dissatisfaction, and we're saying let's, as a committee, take it up with the chair of chairs to say, what then do we do if the minister is not available? Maybe he's not fit for purpose because he's permanently sick, he's permanently out of the country. And how is he saving the people of South Africa who voted for him to be here? Chair, on the issue of state-owned entities, constantly we hear this term bailouts when it relates to state-owned entities. I'm not sure why is it bailout when it's state-owned entities, but it's not bailout when it's home affairs or it's social development. Why are we treating state-owned entities as if they are not entities of the state, just like the departments? So when we give money to IEC, when we give money to social development, police, we don't call it bailouts. But as soon as we give it to state-owned entities, we call it bailouts. Do you know why? Because we want to push a narrative that says they are the ones that are sinking the fiscus of this country, and therefore let's privatize them. It can't be correct, Chair, that we continue like that. We know that these state-owned entities used to perform and make profit at some point, Chair, just to educate some of these members. Because I used to work for Transnet. We even gave 2 million rand to SA Express when it was in dire need for finances. That's how much money Transnet was making. I'm just giving you a typical example. So let's refrain from calling it bailouts. These state-owned entities, they've got the mandates. Are they not living up to the mandates? Let's accuse them of not producing what they used to produce. But to call it bailouts, it's very wrong. And Chair, on the last one is on the loan from the World Bank. We're not satisfied as the EFF that it involves just the ministry alone. And that is why we submitted a private member's bill to say such issues are so significant, particularly to the sovereignty of the country, that it can't be left to just one minister. It has to be a parliament process where members of parliament get to engage on it. Because like Honorable Des was saying, we don't know the conditions, we don't know the terms of those loans. You and I are going to retire soon, Chair. Our children are going to inherit a South Africa that is bankrupt because of the poor decisions that have been taken today. So let's subject it to a public process, parliament process of some sort to avoid such things. We know what happened with SAA. When SAA, a minister took a decision that, no, we're dissolving SAA. And later on, the same minister reversed that decision. But if it had gone through parliament process, I'm sure that we would have found each other somewhere as members of parliament to say, but we don't think that's the right direction. And then we stop playing yo-yo with the lives of our people. That will be all from my side, Chair. Thank you.
Re tla tender to the issues tseo di raisile at the end. Agbare Swart.
Goeiedag, agbare voorsitter, honorable chairperson, colleagues and representatives from National Treasury. Thank you very much for all the responses. Honorable Chair, I must be honest also, and I echo also the first part of the previous speaker. But Honorable Chair, this presentation raises still a lot of serious concerns of what I've listened to. We keep on hearing about steady progress and improvements, but millions of our people out there on the streets of South Africa, they see the opposite on the ground. after 30 years. They still feel, and we experience the opposite on the ground level. Growth is stuck below 2%. Municipalities on a daily basis are collapsing. SOEs continue to drain the fiscus. Yes, they are. And basic services deteriorate while per capita spending in health and education declines. Then Treasury speaks about, of reforms, but your own documents admits delays and weak implementation. Honourable Chairperson, we cannot fix South Africa with good intentions. We need evidence, we need accountability, and we need real consequences for failures. Now, just, Honourable Chair, one or two questions on the first one on structural reforms. Your reports admits ongoing delays in electricity and water, logistics. And the question is, why has National Treasury still not imposed consequences on the departments responsible when these delays are directly suppressing growth and job creation that we so much need in South Africa? The second one is it's on bailouts, and I do call it bailouts. Over 300 billion, Honourable Chairperson, was spent on bailouts, on SOEs that once for a long time were profitable, but now we're spending billions on keeping the doors open and pay for people really not doing what they're supposed to do. But Parliament has not been seen. Has Parliament seen a detailed compliance report showing whether Eskom and Transnet met Treasury's conditions? And why is this information not publicly released? And then the second last one, illicit trade, Honourable Chairperson, they speak about, on enhanced enforcement, but South Africans want results. How many illicit trade syndicates were actually shut down in the last 24 months? And how many convictions were secured? My last question, Honourable Chairperson, on waste and corruption. You say ghost workers are being removed. What is the confirmed total rand value recovered so far? And were any officials disciplined or prosecuted for authorizing these payments? Thank you, Honourable Chair. That is all from my side.
Are you done, Akbar Azad?
Ek is klaar, voorsitter. Baie dankie.
Baie dankie, Akbar Azad. Mchabsek Makwen.
Thank you, Chairperson, and greetings to yourself, Dr. Maswanganyi, and my colleagues, honourable members on the platform. Well, I've got only one question, Chairperson, and a comment. Well, I don't want to call, I want to align myself with Honourable Mawutwe. You know, the term bailout in itself has a certain connotation. Well, I want to stick to the recapitalization or the business rescue of our strategic public entities. And in line with that, Chair, I want to find out from National Treasury, in their effort or in their pursuit to build a capable and a developmental state, what is their comprehensive recapitalization strategy that supports these strategic entities, such as the Land Bank and Post Bank, in their pursuit to ensure that there is ongoing business rescue in the process, particularly Chairperson safeguards jobs. It strengthens the productivity of these strategic entities and to ensure that they fulfill their developmental mandates. What measures will Treasury implement in ensuring that these entities are correctly recapitalized and they become enablers of inclusive growth rather than just ensuring that money is pumped in, but strategically the strategies that are put in place are not carried out to its conclusion because of lack of sometimes, Chair, these entities, the capacity of the management and those that have, or the human resource that must carry out these strategic implementation of these recapitalization strategies. What is National Treasury putting in place to ensure that in this process we safeguard jobs and we strengthen the capacity of these strategic entities? That's my comment and question, Chair. Thank you.
Okay, some chapstick, Honorable Ryder.
Morning, Chairperson. Thank you very much indeed. And I'd like to appreciate the comprehensive response that Treasury has prepared, and certainly the annexures, I haven't had time to work through all of them, but I do think that what they've done here today has added tremendous credibility to the fact that they do take public participation seriously, which was part of our discussion earlier in the week. And I think it's commendable to see the extent to which they have gone to demonstrate their positions, etc. Again, I think that the general tone of today's discussions have been constructive, and so it looks like most presenters have seen that they have been dealt with in a credible manner. If not, having Treasury roll over and agree with them, there certainly has been a constructive engagement. I think it's natural that we won't agree on everything and there won't be immediate changes, as we've seen. But I think that the tone of today's meeting is actually well received. I think there are a number of outstanding issues and things that need to be thought about over time, and look forward to further discussions and engagements on those. And I think that probably brings me to a point on Mr. Axelson's response, where he indicated that Treasury doesn't make announcements or government doesn't make announcements on tax at this stage of the engagement. And I hope that those comments from him were just aimed, and I'm sure they were, at ensuring that his responses or his cautious responses were taken in that context, rather than hoping to avoid the conversation at this time of the year, because I do think it's important for stakeholders to have an early chance in the cycle to put certain matters on the table for thought ahead of the February announcements, etc. So I think that we should be taking the engagements largely in a positive manner, and appreciating the fact that these things are put up so that it doesn't come as a last-minute input. Now, having said that, I note that it is Friday. We are due for responses, and a number of members seem to have put new matters on the table today. which I think is quite difficult to deal with. But yeah, I don't want to delve into that too deeply, but I think we have had good discussions through this week, and I want to appreciate what's come out. Chairperson, having said that, I also want to say that this issue around illicit trade is something that is concerning me. And the fact that we keep on raising sin taxes and making it harder and harder for legitimate trade to happen. We're raising barriers to entry. We're raising the cost of compliance. We are raising the taxes and the affordability of legitimate goods. And not dealing with the illegitimate trade to the satisfaction of enough people. And I mean, one of the issues that we discovered again on oversight recently, the Mahikeng Airport in the Northwest Province, where there is an airport that has clearly been used for smuggling purposes in the past. And it appears like it has been used quite recently for smuggling purposes, but there doesn't seem to be enough willingness or effort to control the influx of illicit goods and to curb illicit trade. And I do think that is something that we need to focus on quite strongly. Going forward, it has been something discussed through this week. It is the one point that I specifically wanted to highlight for our further deliberations, further discussions as we continue our job of fixing and building South Africa. Thank you very much, Chair.
Thank you, Honourable Ryder. Mhlompe Squad.
Thank you, Chair. And let me as well, Chair, pass greetings to all colleagues who are on the platform, but also to the leadership of National Treasury that is here. And I think, Chair, we should as well give credit where it's due. I think I would want to really align with Dr. Beck in terms of the sentiments that where there is some improvements, I think we also need to really express that so that we are able to build on that, so that it's not only the negative that we are able to see, but also the positive. We are able to use that as a base that we can continue to grow and perform better. Chair, mine it's on the SOEs in terms of how far we have gone in terms of capitalization of those, but also we have not really got, some form of a report that would tell us in terms of the overall impact over the past 5 years, so that we're able to know whether we are really, getting there or not. For instance, if your ESCOM will continuously, getting more capitalized and so on. How far? Because we need to really understand where we are. And until such time that we are able to make that assessment, we should be able to know whether indeed we are moving forward in terms of the SOEs. Yes, we have had other SOEs, for instance, in terms of Transnet, that there is a traction in terms of the developments that are taking place in there. But with ESCOM, it's a mixed signals that you get. When you think that we are out of the challenges that we have had, they are actually, re-imaging in terms of provision of electricity and so on, but as well in terms of their financial status. I think we really need to look at that, whether we are really getting grounded in terms of those. The other one, Chair, is in terms of the income tax. to try and address the wage gap inequalities as to whether can it not be part of the tax reforms that could be, brought into space, wherein we are able to, perhaps increase or create or introduce another bracket of persons that would be earning about 5 million per annum, for example, and increase the rate to 50%, just to try and start dealing with some of the issues that as a government we can be able to deal with in terms of your wage gap inequalities and so on. Yes, we are the biggest in terms of inequalities generally as a country, but I think there should be in other areas where we can start coming in and be able to make a change and contribute towards that level of inequalities in the country. I think, the last one, Chair, is in terms of the inflation targeting, as to whether is there any constitutional definition of a balanced and sustainable growth when trying to deal with maintaining price stability, so that we are able to understand the issues that are involved in the inflation targeting and the monetary policy instruments that are used to operationalize the central bank mandate. Whether is there any definition that they're working within, or it's something that is mutating from time to time and so on. I would understand, yes, in terms of the economic climate or environment, but is there any policy definition of this sustainable growth? Thanks, Chair.
Thank you very much, Chair, and greetings to yourself, Dr. Masongani, as well as members on the platform and National Treasury and the stakeholders. Chair, allow me to start by appreciating the stakeholders that keep on timelessly come and make inputs and comments on shaping the policies of our country, especially the policies that are related to the finances and the usage of the finances and the support thereof. So we really appreciate that, because it assists us as the oversight committees on finance to be able to understand what people need on the ground and what the small businesses, small companies, and all the stakeholders that are present here today. And also then the disappointment on those stakeholders that are not using this available opportunity to be part of this session. This is a very important session. And also on a positive note, in supporting Honorable Sikwati, I want to thank the National Treasury for having prepared this information and also empowering us in terms of what is happening in terms of the people's purse and how the challenges thereof that they are raising. I am not against what the Honorable Mautwe and Honorable Lusizo have said. That needs to be addressed so that our committee is taken seriously. But on a positive note, I want to appreciate the team. Chair, there is a strong view, general view or strong view that the South African Reserve Bank mandate should be expanded or reviewed. My question is, would the National Treasury support this view of the review of the mandate of the South African Reserve Bank in line with the Constitution? Should in fiscal and monetary policy be shaped by the macroeconomic policy objectives of government? That's my first question. And my second question, Chair, we know that there are countries like Norway and USA that have a dual mandate, shaping time and space of application of attaining price stability without negatively impairing output in the economy, which we know that it can negatively impact economic growth and employment. So does the South African Reserve Bank factor in employment and output in their repo rate decision making that we know even now the governor has announced changes in terms of the repo rate, which is a positive change, Chair. So I would want to know if the South African Reserve Bank would then factor in the employment and output in that kind of in the decisions that they are making and implementation of other monetary policy tools that are multiple, as reflected in the power of the bank. Thank you, Chair.
Siyabulela kakhulu Mhlonitsho. Honorable Bratz, are you still there?
Yes, thank you, Chairperson. I'm still here. If I might proceed, thank you. Thank you, Chairperson, and good morning to everybody on the platform. And once again, thank you to National Treasury for their detailed response to the inputs that were made. Chairperson, I have three issues that I want to raise with National Treasury. Now, this morning they've once again mentioned grant reforms. A question that I've been asking for a while, and I'm going to ask a similar question to National Treasury again, what is regarding the specific structural and systemic reforms that they will introduce to improve planning, procurement, and implementation of infrastructure grants. And what is the possibility of even ring-fencing these grants at local and provincial level in order to eliminate wasteful, irregular and fruitless expenses, which we often see disappear in activities such as paying salaries and luxury vehicles. And also the way that these grants are managed on the ground by municipalities especially, result in costly delays in projects. My second question is regarding the illicit cigarette trade and the related revenue losses. Now, that is most probably a new issue that was introduced this morning, but I think going forward it is important that we receive an update from National Treasury on the successes that they've achieved so far in connection together with SARS in this regard. We know that the cigarette trade or illicit cigarette trade is still ongoing, and that is a matter of concern. Then thirdly, and I think this is a new issue on the table for today's discussion, but last week I've asked Treasury the question when we engaged the Minister, and I haven't received answers, and I've been engaging with Treasury for quite a while now on the issue of the Southern African Customs Agreement, or SACO. Now, it is important for our revenue base and going forward that we get specific details on this agreement. And once again, I've highlighted in the past the overlap between the SACO agreement and the African Continental Free Trade Agreement, but there are a total of 7 international agreements on international as well as regional basis that overlap with SACO. And also going forward, it is an issue and a matter that needs to be discussed, and we need to get clarity on that. So with that, those are all my questions. Thank you, Chairperson.
Thank you. Honorable Brett. Let's come to Alan and Mangwen. I don't see a space for Treasury to respond. Of course, this was an engagement. They will come to our meeting. When are we meeting? Is it Tuesday next week to consider the report?
Yes, Chair. We've set aside Tuesday for consideration of the first draft of the report and Wednesday for the consideration and adoption of the report, Chair.
Okay. So it means we are almost done with our meeting. What we can do from here, of course, we'll meet next week as the committees to consider and adopt the report that will be submitted to the NA and the NCOP respectively. We'll raise the issue of the absenteeism with the minister as to what happened. If it's not here, one of the deputy ministers who are supposed to be here, the DG and the DDGs, will write that letter to him. There are quite a number of issues that honorable members have raised, which I think need further discussion. Maybe what I can propose, Alan and Mangwen, can we have a retreat next year when we come back? A 3-day, we leave on a Friday and come back on Sunday evening, where we can find space and time to discuss some of the critical issues that we are raising here, because within the strict committee program, it's very difficult to go into detail because the committee program is highly regulated. You have to do this at this time and stop here and stuff. But if we can have a weekend retreat, talk about these issues of SOEs, the loans. We get a detailed presentation from National Treasury on the loans. We get the detailed presentation on the SOEs, including by the presidency, because now Minister Maruping Ramokgopa is responsible for many of the SOEs that were under the then Department of State or Public Enterprises. The other issue that we must discuss next year, SARS wanted to come up with what we call track and trace. We are complaining about the illicit cigarette, illicit liquor, but I'm told, I don't have facts, SARS will have to come here and explain that there is a resistance from the industry about activating the track and trace. Since I joined this committee some years back, we have been discussing the issue of track and trace. And we saw what happened during the time of COVID. Liquor mushroomed from all over here. There were so many cigarette packs going around. And we asked the question, who's manufacturing this liquor? Who's manufacturing these cigarettes? We could not get an answer up to today. Is there a resistance from the industry for government or for SARS to install track and trace devices in the manufacturing plants? If so, why? If not so, why also are those track and traces systems not being installed? We'll have to get SARS when we come back in February to give us a full explanation what happened, because that was the decision some years back about the track and trace systems that had to be installed in those manufacturing plants. So, Alan Mangwing, next year, after SONA budget, let's have a retreat where we'll have enough time to discuss some of these issues. Just look around. We don't have to go very far because Parliament doesn't have money. We can go to PAL, we can go to Franshoek. I think those are nice places for a retreat so that members can relax in the afternoons so that we discuss these issues in detail. So, honorable members, let's adjourn this meeting and come back on Tuesday to consider and adopt the reports. Thanks very much. All the best for the weekend, and we wish our president and our government to host a very successful G20 summit that will demonstrate to the world out there that South Africa is a better place to visit by tourists. South Africa is a better place to visit, but to invest by investors out there. And I hope this weekend will demonstrate that as South Africans, and no one will badmouth the country. We must speak positive message to our guests who are here to project a positive image of this rainbow nation of Tate Mandela. The meeting is adjourned. We'll meet again on Tuesday. We can sing.
Long live the chair. Thank you.